China's biggest chipmaker, SMIC, says fourth quarter net profit has almost tripled to $257 million from a year ago. It blew past estimates despite being entangled in the Sino-US chip war. SMIC was added to a US entity list in December, restricting access to American tech and businesses. In its earnings statement, SMIC also forecast sales in the current quarter to rise by as much as 9% from Q4. For a closer look, Freddy Lim, co-founder and CIO of StashAway, joins us. Thanks for joining us, Freddy. SMIC has had to change its R&D priorities several times because of the US-China trade war, which may not end anytime soon, given what President Biden has said about it. What's the impact of that on the company?
Well, clearly, today's numbers been a lot better than expected. The impact hasn't really been felt. But if you look at the inventories of SMIC, the issue with trade, the US-China trade war, will have to be managed at some point. If it doesn't, it will be a big problem for SMIC towards the second half of 2021.
Yeah, and given what we've heard from the company, which will be the bigger driver SMIC's future this year, the US sanctions or its R&D and manufacturing capabilities, you think?
Unfortunately, R&D and manufacturing progress, there are factors that would take time to work through to eliminate any dependence on the US for supplies. So the best solution is still for US and China to work out some sort of accord or resolutions to at least ease the pain in the near term.
Right, let's broaden our discussion. The US blacklisting of SMIC has worsened the global chip supply, sending buyers to Taiwanese chip makers. And how do you see this supply deficit progressing?
Well, the supply deficit actually is already been felt by the industry, semiconductors as a whole, and you start seeing a lot of a squeeze in supply and inability to meet demands industry-wide and globally. Not just because SMICs may be unable to produce, but there are also other names that's affected from China. So this will broaden if it's not resolved by the second half of the year. And as we know, the pandemic is still with us. Though the vaccines are progressing, we are still in a situation where perhaps the way we work has permanently changed in the new world, and demands for chips, new equipments, electronic services are going to be there for a while here. So we will have a supply constraint going forward.
All right. Thank you, Freddy Lim from StashAway. Thank you for your insights.